Alrighty, what's going on, boys? So there's a lot of charts that I want to review, a lot of trades that I want to go over from last week. I like to go over the trades from last week, and I mean, it has nothing to do with this week. Some of them do, but some of these are just really important lessons to learn for myself as well as you guys. Looking from my perspective and seeing how I mess up, seeing how I do well, seeing how everything, the good and the bad, right? Because there's always going to be a little bit of bad in terms of bad trades, losses, misreads, poor management. You want to avoid this at all times. However, it just happens. So I initially was short Netflix, and I've already talked about this trade. I sound like I'm a broken record here, but we have a gap beneath us. So every single time that I'm looking at a chart, and then I see top heavy distribution, I see this high, I see a lot of volume behind that high. I see a previous swing high, which is into that new high, and then I see failure off of the high, and then I see a pullback, and then a constructive higher low, basically off of this earnings candle territory. And then from there, what happens is we get the bid off of the bull gap. I initially shorted Netflix over here on the all-time high failure off of this wick, off of this previous day high failure, leading into this Tuesday. I believe there was also data on this Tuesday. If you go over to Tuesday on the Nasdaq. What day was that? That was Tuesday, September 3rd. You go over to Tuesday, September 3rd on the NASDAQ. This was also a really nice cooperation with the general tech market. We had a bull gap beneath us, okay? We had a bull gap that was sitting right there, and then we also kind of had these bull gaps that were sitting down here, right? And basically all we got was a macro level retest off of this spot and then a higher low off of there. If you go over to SPY, we kind of got the same general thing, except this has been a little bit more of a leader as of lately. And this was a really, really, really nice NWOG setup leading into the next week. So this is whenever I started to cover the short, okay? And you had a lot of time here to cover this short. I mean, you had wicks. You had a wick that was lower than this trading day on Friday, September 6th. And then you were getting these inside bar looking candles. You were sitting beneath a support from over here. So this was a really, really, really nice trade. And I was simply just looking to re-enter this because we never got that marked down phase. So whenever you're looking at some sort of distribution, I always talk about distribution schematics and how you get the last point of supply, how you get the sign of weakness, and then you get the actual markdown phase, okay? So there's going to be a sell climax where you get these highs that are sold. The progression is starting to stall from buyers. And then maybe it leads us into like some sort of all-time high. Pretend this is a previous swing high. And then what it does is it breaks, retests, maybe finds a lower high, fails, lower high, and then we start getting a change of character in the overall chart. And maybe this is where you start kind of just basing here, looking relatively weak, right? And let's just say, for example, you have bull gaps beneath you that are down here that are unfilled. Maybe you have untested levels. Maybe you have some sort of relative equal lows that are sitting down here, something that looks like this, where there's too much support, not enough fuel for the upside. You have some sort of sell climax going on like the weekly chart, but you never got that marked down yet, right? So you get the all-time high failure, you're getting the change of character in the upper range of the chart, you're getting dominant seller patterns in terms of volume and price and daily candle spreads. You're getting the lower highs, you're getting the structure developing, and we were just simply looking for this. So we're just simply looking for the markdown, okay? And we already did get this over here. This was kind of a markdown. I mean, it's more and less just a daily constructive higher low that is being put in place off of where we would say territory has been claimed from buyers on top of this earnings candle wick. And then that basically just led us to then test the new all-time high once again, okay? So whenever we tested the new all-time high, I'm simply looking at the previous all-time high, which is up here. This is technically the new all-time high. I don't really care about this one because this is more where the daily print perspective is in terms of failure, in terms of wicks off of the spot, but no a failure to close above technically. So whenever I'm looking at all of this and then I see the weekly sell climax that is happening, I am just simply looking for the markdown phase, right? And that's what really makes good risk reward on a lot of these trades. Do I think that this is coming? Yes, I do. Did I manage my position a little bit poorly? Probably, because I mean we have earnings. You guys got to keep in mind what is jacking up premiums around relative to the next month or so, because that's the expiration that I typically aim for whenever I do analysis like this. And this is Thursday, October 17th report. Okay, so whenever you're looking at this and then you go into your daily, you have a report that's sitting within the expiry of obviously October 18th. That's a strike. That's a expiration that I would really like to trade. So whenever it's not really available to me, it makes the trade definitely a lot more difficult. So long story short, that's one thing that was a little bit messed up about the trade. We also had this wick here. I don't really care about that wick. Like I said, this is the bigger perspective of the daily level that we need to be losing. And I started adding into this, seeing that this could be a potential UTAD. Okay, so I talk about market kind of cooperating with this general setup, because environment means a lot more than the setup, guys. So whenever I'm looking from a perspective of the NASDAQ, we have this big progression spot right over here. So this is technically the opening print of this big gap up, and then this is where you actually have the actual gap. Okay, you go over to Netflix, you take a look at this, and we're looking like we're leading into a UTAD. We get a diminishing looking spread, lower volume into a new all-time high, and then the next following day on Thursday, September 26th, I'm pretty sure there was also data on this day. Thursday, September 26th was whenever we were actually within this bear gap that's sitting up here. So I figured the market as a whole could cooperate pretty well. I didn't necessarily think that the sell would be this weak. I was thinking we would get some sort of macro higher low that was sitting off of this trend, and then also in confluence to this bull gap over here. Unfortunately, we never got that actually, and I thought Netflix would have a little bit more room down, because I thought the general market was going to do something like this into that Vanna charm flows that are kicking in next week on Monday, or I should say tomorrow. And then obviously start bouncing and then formulating structure from there for the upside, right? That's what I thought was going to happen, and I thought the market would cooperate a little bit better. However, I did have some long side trades, so is it the biggest deal in the world? No. I mean, this has just been a relatively weak chart. We're looking at a chart where you're getting, like I said, the weekly sell climax. You're getting these distributive volume patterns on the daily. You're getting a really, really ugly looking earnings candle, and then this is whenever the market put in a footprint as a whole on August 5th. I'm sure everybody should know what I mean by that. And then that's whenever we started to get these trends higher, and then they looked like they were distributing it again into the previous swing high. And then that continued, like I said, for potentially a UTAD. I thought we were going to move down here to 690 as well as with QQQ. I am not mad about the loss. I'm more or less just mad about my management. I added up here. I added this wick over here on the gap up. If you go into the hourly, you're going to take a look at like, okay, we have capitulation on the hourly. We have this big daily level that's sitting over here. And then we just kind of need to hold lower highs on the hourly beneath that. You could pull your fibs. You could start looking at like discounted ranges to add lower highs on in terms of like the hourly, because this is an hourly 2-bar sequence over here, guys, where you're getting consolidation beneath equilibrium. Pull fibs from low to high. Take a look at this, and we're holding beneath this, right? You go into the 15. This is a really nice failure. And a nice opportunity to start thinking about. I actually have a little line here because I was risking the opening print on this given day. It was just a really nice easy gap up, a little bit like close to my average, and then I actually sized up and like got a worse average, which was probably a little bit. It was probably a little uncalled for, but it really wasn't. I just didn't manage the trade down here. Like, I am green a lot of money down here, and I don't realize enough of it, and then I let it go red the next following. I'm green over here too, and then I let it go red the next following 2 trading days later, right? That's on me. That's not on the market. I mean, I can't blame the market on not getting the cooperation in terms of, I just thought the micro distribution was going to be a little bit bigger to shake out a lot of bulls, and then leading into those flows, that's whenever we start to bounce. I thought maybe we could even get some sort of liquidity trap beneath the trend. I thought maybe we could get just some sort of discounted swing low to swing high type of scenario here, which was tying in directly with this bull gap. There was so many scenarios that were playing out for this thing to just distribute its way down into 471, 470. Like I said, didn't happen. I was wrong. But I also had some other long side trades. So I want to go over those because I feel like it's really important to diversify. It's not necessarily that I was so confident within this structure, within this chart. We obviously had the signs of this all being a short, right? Apple, Yusuf, I saw you on this one too, and this was a really nice short as well. This was one where you're getting, like I said, the top heavy distribution on the weekly chart. If you go to the weekly, you have all of these relative equal highs that are sitting up here, and then you have your swing high that's sitting all the way up here at this. This is your all-time high. So what do you guys notice within this chart that's actually very, very, very important? Does anybody know? There's something about a weekly chart that I always hold a lot of importance to, as well as those breakaway gaps that get the capitulation beneath. They retrace into that to collect liquidity and then move it their way lower. Okay, that's just how short positions work. That's why I was short Netflix. That's why I've been short Apple in the past. That's why I've been short a lot of names successfully. And technically, Netflix could have been a successful trade. But does anybody know on this chart, on this weekly, what is important about this chart? Besides the relative equal highs, besides, obviously, there's nothing that's too clear here. I'm just looking at one simple zone. If anybody knows. It doesn't seem like anybody knows, but it's this. Okay, so it's a weekly gap. Okay, you go into the daily, you take a look at this. This was basically a breakaway gap where the RSI, I'm not an RSI guy. This is just what the parabolic short setup is. We have a breakaway gap, okay? And then what that means, guys, is it's making new all-time highs. It's getting these really easy trends higher, and then it's moving its way higher into like these gaps, and then what happens is you get like a stall at the top of the trend, or either a capitulation, or something that looks really ugly, and then you start failing beneath that gap, and then you start to sell off, right? If you go over and take a look at something like Nvidia, same general concept here. Like, this is a daily gap where you gap up. That's a breakaway gap. That calls for a parabolic short setup, and then what happens is the volume really ramped up here on a 3 continuation type of sell. Volume really dried out here, and then it pushes back higher into the top of that gap, and then it defends it, because this is a lot of capitulation here, guys. This is a lot of imbalance within the chart. So whenever you're looking at something where, not all the liquidity is collected off of a general area, and then maybe you're trending higher, and then you start to trend higher with ease, and then you get this crazy gap, and then you sell right beneath that gap, and then you get these shallow lower highs that are subsequently beneath that gap. It's typically going to retrace into those ranges where there is like capitulation, where there's a gap, where there's anything. So whenever I'm looking at Apple, as far as cooperating with the market together as well, I did not think this wick was going to hold a support. Like I said, I like to talk about what I see live, not what I see in hindsight. There's so many hindsight people out there. I like to talk about, I thought this was going to bleed and break through into those October 7th flows to then go target the 220, 221 gap. You go take a look at QQQ, same general concept. Bear gap on QQQ. You go take a look at Apple, swept the relative equal highs, got a gap down, increase in volume, followed by really low volume at these bottoms. If you approach the market in this way with just trading what you see, I don't care if I lost a trade this week, the probabilities are going to really favor my end as I, progressively move throughout the rest of the year, right? So it's not a big deal for me. It hurts. Like, the loss was not fun, but like, it's really not that big of a deal. Now let's go over the long side trades, because I did figure, guys, this is it looks like sell side mitigation, meaning sellers selling equity, pulling back to then be able to repurchase, or then to be able to, or just simply as a entry liquidity for a bid, or just simply to rewash. So what that means is, like, you're up here, you were a buyer over here on the gap, and then you simply sell here, and then you move your bid up where it was from over here to just right here for like a higher low. I mean, that's a very probable outcome. I didn't necessarily think we were going to. However, I'm picking apart the really nice long side charts now because we had the short side focus. I really truly do believe this, that we had the short side focus. It made a lot of sense over here, right? However, just didn't get beneath that 2021 swing high. So then we, probably have to cover on these wicks. I didn't do it. So yeah. As far as the other trades go, crowd, really, really, really beautiful chart. If you guys take a look at the weekly, not a really nice chart. Guess what we have here? A weekly gap. There is a big significance around weekly gaps, right? I talk about the NWOG a lot, meaning a new week opening gap. This is the same general concept, right? Typically, those weekly gaps if they're not tested into, then that's the new draw higher, right? And then if that test into that gap is a relatively low volume sell, it looks like seller mitigation, it looks like short side mitigation, it looks like a buyer who bought and then sold and then is repurchasing. There's a lot of ways in which a chart can formulate, but all we need to do is look at volume and price because that tells us everything. We got a really nice heavy volume pop on Friday, September 20th, right? And we have this big daily level. In a really perfect world, we would just simply bounce off this spot. You can't necessarily think like that. You got to think in terms of a grasp of inventory for the buyers. Where do they need to find an attractive price at? Where are they going to find an attractive price to then bid this higher? Keep in mind, we have two consecutive bull gaps that are sitting one beneath us from 273 to 276. And then we also have this other one here that's sitting on this like 285 level down into the bottom of this at 277, right? So we have a couple trailing levels and then we have a couple execution levels. I'm looking around this range, okay? And then we actually had a relatively strong tape on Wednesday. You go over to the QQQ, you go over to the general market, and it was just an inside bar, low volume with a bull gap beneath us. So I didn't take a lot of size on this one because I was still really, really worried about the market. I still do think we could pull back, but I'm not going to hold as much of a bias. I'm not going to be looking short as much. I mean, there's a couple names that I do like leading into the new week. However, I mean, I could short Netflix again. Like I said, I mean, the success was there with it, but the market just didn't cooperate. So I was looking, like I said, for a counter to that trade, for almost like a little hedge to that trade, this bull gap. Okay, so technically the opening print is up here. However, that's a pretty big gap in a zone of execution to play off of. So I'm just going to be looking at the actual gap itself, not the opening print. If you want to take a look at the opening print, that could be your new trailing whenever you buy a call and that call gets above. And yeah, so I had a little bit of exposure here after seeing the Wednesday's move push us higher, and then we had two 15-minute inside bars inside of the orb that were drying out on volume. Okay, so these were all drying out on volume, and then we got a diminishing like 15-minute looking candle that was leading into the upper range of that orb, and then all we simply did, guys, was just put in higher low by higher low and move our way higher. And we definitely had a little bit of absorption that was sitting over here just because of how you have these big volume spikes. There's not a lot of price movement here, and it just looks like buyers are finally making an effort. So whenever you take a look at like entry possibilities of like entries and stuff, I mean, you have this bull gap that's still sitting above you, right? You have this previous like double bottom looking support, right? And this could pretty much be your risk, like 277. Yeah, I mean, it would be the mid candle of the stronger tape on Wednesday, because you guys should all know by now it's a very basic concept. I think people just really, really, really confuse it. That there is always going to be like an equilibrium spot within a day that makes progress that is defended. So then you just simply go into your hourly, you take a look. You maybe want to look at like fibs from low to high. You don't necessarily need to. Take a look at the opening print. Take a look at the burst right off the open. Take a look at like potential bid fills on pullbacks, intraday fibs if you like to do that. 618, 280 can be the risk. You can bump it up a little bit. You could take it to the previous trading day high. I was just basically adding all within this range on these pullbacks, right? Because I wasn't heavy size initially. I thought the market wasn't going to cooperate. I initially had some size on Wednesday, and then I upped that size with fills on Thursday, and then I took those fills for a nice little win. This was up into the daily gap, okay? And then we never got the daily print closure above the gap, so I scaled a little bit too much. However, we have a new gap the next following trading day, and you have to envision and think about what a weekly print's going to look like. Do you think this weekly print is going to close successfully above this gap? I personally do. I think this weekly chart is really, really, really nice. You can't really look at a lot of volume. There's the biggest, heaviest volume is technically through the gap. We've already tested through the gap. You go into the daily. This already saw really low volume sell right into the bottom of a bull gap with a really heavy volume pop. With a bull gap and a really nice candle spread to that given day. So there is a buyer hiding somewhere within here. Like, I just know he is. It's either this gap or it's either this gap. It's either, and if you want to really minimize your ranges of execution, it's either that wick or it's either the bottom of the gap. It's simple as that. That's why I was only adding contract by contract, and then I had to get a little bit more aggressive once I found the confirmation through these 2 trading days. And then that's whenever I went into the Friday, and then I added one more time. I was just adding contract by a contract. I've been talking about this setup for a very long time. I actually lost money on it not that long ago, and I got it back, right? I mean, it's just a simple gap up, a fill of the overnight gap, and then it starts to hold this bigger perspective of this gap at 285. That's also a psych level, and then we finally get our move higher, right? This is also the massive progression spot from the actual signal bar that allowed us to take the trade, right? So I was looking at this. I was looking at, like I said, just the simple major gap that's within this chart. You don't need to mark this gap technically or have a zone there. I mean, you could just simply mark the bottom of this where you would ideally find a support if you started to claim above, and then it's just a simple like channel break on like the daily, right? So, you know, here's your lower high structure. It's all seller mitigation rather than an actual seller unloading. This was just accumulation from actually a lot of these heavy volume candles that led to these gap downs, and they kept accumulating. And guys, they always buy the bad news. They always buy the bad news. The bad news then develops structure. Then it starts looking decent. It has a lot of crowded negative sentiment around it. You have a lot of gaps to target to the upside. You have a lot of really nice risk levels to play off of. You're getting daily higher lows by higher lows by higher lows. You're getting, you know, swing low to swing high equilibrium, 272.20. It was almost on the test, which was sitting within this bull gap. If you wanted to take a little bit more risk, there is not a big signal in this candle, okay? Like, yes, the execution should be somewhere off of this general local area. However, there is not a signal here, okay? So there is zero problem in taking this risk over here. Off of the 285, which is also a claim of a massive level, as well as this candle itself, as well as the previous day overnight gap closure. Beautiful trade, right? And I actually still own a lot of my size over here. The one that I have that I own a little bit more with size is further dated though. So basically I added up and I added a little heavier. Like I said, I feel like you guys that have been in here for a while should definitely know what I'm talking about. Risk beneath, it's literally like $2-3 a risk, guys. And then start targeting the upside. This gap is not filled. All right, this wick right here is not a fill in the gap, and there is not enough volume to push this thing lower. So, boom. Look at that trade. If you want to be a little bit more lenient towards the risk, take it, $3. If you can't risk $3 on this trade, call your entry above the 285 spot, because that was mine. I sized up. I didn't want anybody to look at me like a dumbass, and I mean, I don't really care if you think that, but like, it's okay to size up whenever you have the confirmation. Like, it is totally okay. So yeah. Does anybody have any questions about these trades? D-Dog, actually, yeah. Don't say anything yet. Shut your mouth. I'm gonna go over D-Dog. Just kidding. D-Dog. Was anybody wondering? I want to ask a quick question. Was anybody wondering why I like that trade? Oh, here, I'll pull up I'm sorry. I'll pull up the chart. My bad. Dude, I need to fix this trading view issue so bad. I'm just been so lazy. Sympathy trade, yeah. Yes, definitely. Sympathy to what? I talked about this with you guys actually a lot. Well, sympathy to... All right, nobody's talking. This was a sympathy to snow. So this is D-Dog. It's like cloud. It's like software. I don't necessarily know, but like it's in that basket, and the chart was beautiful. Okay, so this is what we would call some sort of like weekly Wyckoff, basically accumulation. Guys, look at this chart. Look at the volume on the weekly. You guys got to understand and sometimes realize these trades have so many confluences that I look for. Like so many. Like Netflix off the weekly. Yes, it was a loss, but analysis was decent there. I mean, it wasn't. It was a loss because I'm a dumbass. D-Dog. Look at the weekly. I mean, Tesla in the summer. Any of these like really nice trades. Look at the weekly. Big volume. This is the biggest weekly volume on D-Dog aside from 2020 that we've ever seen. That we have ever seen. Are you kidding me? And then what's a big law of mine? Does anybody know a big thing of mine? A big rule of mine? I just shared this with you guys in the scan from last week on Oxy. Oxy was a beautiful fucking trade this week. What's a big rule of mine that I teach? Does anybody know? If nobody can answer this, I'm not going to be happy. Oh, no. Well, Gage, you weren't here for that because I'm a retard and thought you just didn't join. But anyway, nobody knows. I guess I talk to walls, man. I guess I talk to walls. This is going to piss me off if nobody knows. It really is. Like, not to be an asshole, but like this is going to piss me off. What did I talk about in the scan last week? If anybody paid attention, what is a rule? What is a law of mine? What is about this chart? It's a very simple explanation. No. All right. Well, if a range does not have enough liquidity. This range, this whole extreme did not have enough liquidity, okay? People need to understand that a breakdown trade, like, oh, I'm going to trade that breakdown. You are dumb. Breakdown trades are so dumb because a pullback in a breakdown out of a very well-established support basically just means there's no demand off of that support to move your way higher. So where do you have to move? Where is the draw to? Somebody needs to... Yes, thank you, Django. Shit. Fuck. The draw is to the heavy volume, thick spread, wide body candles. Where is the heavy volume, thick spread, wide body candles? It's almost like an FVG. I'm not an FVG nerd, but the FVG concept makes a ton of sense if you're looking at this from an auction perspective, not just an imbalanced candle with a big body, not just like some sort of like funded trader about like, oh, 2-minute FVG. No. Big body, a lot of volume. The range above you does not have enough liquidity to push the thing higher. So where do you have to do? You have to break down the support. Guess what you get whenever support breakdown, short it. And then what is that? That is exit liquidity. That's why bad traders move price for good traders. Big volume, big spread. And it's holding on the weekly chart right off of that spot. Guess what else? Hey, you guys have to know like what's happening in the market. Why else did I like Oxy? And I didn't actually trade Oxy. I traded CVX. Well, that's not true. I have shares of Oxy down here again. So this is my whole, repurchasing of Oxy type of time. But if we go over to Apple, guys, what does Warren Buffett hold? A lot of Apple and Oxy. I think Warren Buffett liquidated over here on this Friday, September 20th. I think that fucker sold a shitload. I think someone sold a shitload. I think someone sold a lot of shares over here. This was liquidation. This was straight up, I'm selling my stake. I'm a billionaire. I'm selling this shit. Screw you, Apple. Guess what happens as soon as we wipe out those highs that were off that spot again? Someone sold again, dude. Someone fucking sold again. Like, this is definitely distribution. And the fact that it didn't distribute its way down into the bottom of the gap is just beyond me, dude. Like, oh my gosh, that is actually so annoying. I thought Buffett was selling off of his Apple. Yeah, I mean, dude, that's not a bad take. Look at this shit, dude. Look at that volume behind that. Look at that close. Minus 2%, 2.2 million volume. And then you get that same seller that was reappearing. This is not the market gapping down, by the way. This is not a Monday into Tuesday type of gap down. No. This is Apple looks like ass. That's what that is. Here's Monday into Tuesday, guys. The closing print, opening print, same general area. There was a lot of relative weakness over here. I think this fucker was selling and adding to Oxy. I really do. This is an underperformer. The chart's beautiful. He's getting the red 40 trader that's looking like this is a breakdown, and he's shorting it, and he's shorting the whole. He doesn't understand what's going to happen over here to him. And this was a beautiful trade. I traded this one way differently than what I did with like options on short term with CVX. But if you guys traded Oxy, fantastic trade. Amazing trade. So, do you guys understand those concepts? Because Apple, I think Apple's distribution. I really do. I think energy's accumulation. I think DDOG. I forgot to talk about this one. Sorry. Path of least resistance model. I don't have it marked out on my chart because I want you guys to interact with these calls. Go to your guys' DDOG chart if you're able to, if anybody is. Where's the progress gap? Where's the gap that should be defended now for a higher low and then a coiled daily spread, or at least just absorption of the resistance and then a push, a path of least resistance for them to shoot to the 125 gap above us? We're in calls here, not puts. Your read on Oxy was better than the execution. I don't necessarily know if it's your execution, dude. I think it's, you got to remember, like, you are allowed to buy time. Like, I buy time a lot of time. Like, meaning, like, I have DDOG here. Next week calls on runners. That is not my only position on DDOG. Like, I don't just trade, like, a week or two out. I just wanted to make that clear because I feel like I inspire people to, like, sometimes hit big trades because they see I hit some big trades on like shorter expiration on a really clean like daily accumulation or distribution. And it runs like 500%. I mean, you don't need to do that. You could buy 2 months of time and just walk away. Ask the question again. I'm on the charts now. Where is the big gap over here? Well, it's kind of already marked out on my chart, but there's another one on DDOG that should be defended. Now that we're above it, we're into the path of least resistance model where we found our constructive daily high or low off of where the shakeout level was itself. This, keep in mind, guys. I mean, this is a big weekly this is a big weekly support over here. You could draw yourself a little zone. I'm just taking the low that was technically now a breakdown failure. And then where do we get the weekly reaccumulation? This chop that led to a markup higher was right off the spot, right? Was right off of this previous level that failed to break down. I've always talked about this. It's like an inverse head and shoulders model or a head and shoulders model. However, I'm not a big pattern trader. It just has to align with volume. It has to align with agreeing with the rest of the market, the rotations, the industry. Several equities, and what also got this moving. Snow is almost like its big brother. Snow is a piece of shit, guys, but guess what? Snow is in a disgusting base, and volume is drying into the bottom of the support. So do you really think they're going to break that down? I mean, they could with news. It is so beaten down. I don't even see why you'd come out with news. I'd rather accumulate and then redistribute it whenever you want to come out with the news, because we have a bear gap above us. So, yeah. I mean, this is still trading down towards that August 5th price action. It swept it, and then it just held a support like for dear life, dude. So I'm gonna go grab a cup of coffee real quick. Stay in the call, guys. I'll be back really, really, really quick. But I want someone to send me in general chat what I was looking at that isn't marked out on my chart. Obviously, these are the most important levels all the way up here. Like this is my execution. The opening print is like a trailing or like even an execution spot to then risk the opening print. Or, I mean, you have to risk the wick here. Risking the opening print could just be like a slight closure beneath. And then you stop because you're a disciplined trader. And then you were too disciplined and then it moved. We have a you could buy time here before this earnings. You could buy before the expiry on that week, right? So this is a Tuesday. Buy the week before. So that would be like, what would that be? Let me take a look. That's November 12th. If you go to November 12th, you would be buying. You could buy the. November 8th expiry. All right, I'm gonna ask you guys. I'll be back real quick. I gotta grab another cup of coffee because I am tired. Sorry, I'm back. Alrighty. Let's take a look at general real quick. I'll put it on the stream for you folks. We'll take a look. Alrighty. Okay, yeah. Correct, Gage. Correct. So, I like earnings gaps. I don't like just any general gap. Like, I'm not just going to be like, oh, this one right here. Like, for a target, yes, I will. If I'm trading this thing down here and I'm looking for a target here, yes, that is that's not a gap that they're fighting for in terms of like they're going to protect, right? It's right here. It's the earnings gap. So, like, look at the top of it. Oh, this is actually the opening print up here. Okay, so use the opening print because that's the gap. Look at that. It's just sitting there, basing, as well as within this little area. So I usually make my like higher time frame levels like purple. That way I don't get way too. I don't hold too much importance to a level that needs to be respected on several daily prints. Like, you guys got to also remember, like, these levels here. Like, I'm not executing off of those levels. Like, the smaller time frame gaps, I will, or like the less relevant gaps that are just like balance, like a balance gap where liquidity sits there. Like, sure, but like in terms of actual like trade management, looking at like how I can get a daily read on this thing, I'm looking at this big earnings gap that's sitting over here, as well as this resistance that's sitting all the way up here, right? So this is your resistance. You get your first constructive higher low, which was actually off of the failure level itself, like I said. This is from low to high, right off the 618. So I already had D-Dog on a focus over here. I really did. As soon as we started to get that pop, right? And then once we pushed into this flat top resistance, guys, I mean, this is however many days of a resistance that we're looking at. We had 1, 2, 3, 4, 5, 6, 7, 8, 9 tests of the resistance with the volume increasing, okay? So the volume is increasing. It actually dried up towards the bottom range of this area, and then it starts to increase as we start to like make as we start to progressively move our way back up into the flat top resistance, right? I've talked about this concept so many times with the Roblox trade not too long ago, with the whole entire energy rotation that I figured out after January OPEX of 2024. It's just a simple path of least resistance, right? The volume is increasing into an area where a resistance break is possible. And whenever you have a resistance break a resistance, I should say, that's 56 days long, like 39 bars, daily bars, and technically even longer if you look at over here, that is going to call for decent expansion, and decent expansion brings good risk to reward, right? We always need the expansion. So this is your level of risk for sure. This was also a previous weekly level. So if you go into the weekly, this is actually a weekly level. This has held on the weekly chart for how many weeks on end? 70 days, 10 weeks. And then it started to not really respect itself, but the weekly chart from the higher, bigger, larger perspective of this, guys, is, first of all, higher low, internal higher lows, and then expansion. Now potentially all the way up into the gap, right? There's also a weekly wick off of that gap. If there is a weekly wick right beneath that gap, I like the gap even more. This is also you don't need to do higher low trend. It is a higher low trend. I don't really like trend lines, but like it works. You could pull fibs on the weekly chart from low to high. You don't have to leave them there. But I mean, that's just a simple 618 higher low on the weekly. This is also potentially building out some sort of sign of strength, right? So this is a big weekly level right here. Okay. Guess what it ties right into? Isn't that crazy, guys? Isn't that crazy? So basically all I'm saying is that you're going to get the movement. You're going to get the movement. And you can pull random. These are not random fibs. What are you talking about? This is a random fib. I don't know. Yeah, I don't understand that. Anyway, yeah, big weekly level here. This was claimed by 118. I mean, this was also a big weekly support turn resistance. Big weekly level. Take it all the way back through. Look at this over here. Huge weekly level. Okay, so whenever you go into the daily and then you find a path of least resistance on the daily that's right up against that weekly level, that's awesome if you can read that. And I talked about this long on this day, on this pullback. I talked about it right off the open, and the chart was a little sketchy, not going to lie. But look at that 15. And then just a melt higher, really nice continuation, really strong close. I'm holding into next week, and I'm looking for the 125 gap on the further dated, not necessarily the shorter dated. Alrighty, so what other trades did I take? You know how to draw fibs, I guess? I mean, this is a very basic fib, Django. If you need to watch the videos if you think this is me pulling it out of my ass from here to here. I mean, that's the most basic stuff I've ever. Oh, I'm sorry, I didn't see that. My bad. I was gonna say, dude, if you thought that was a random fib, that is crazy. All right. Anyway, I might go into my scan now. Oh, dude, I see. You guys remember whenever I was long on this day? Like on this week, like Monday and Tuesday, September 30th and October 1st. Bro, that markdown and really heavy volume for a higher low in the daily. And guess where this is tying directly off of? It's tying directly off of this gap as well as this gap. Like a double gap area with a wick right off of the bottom. And then they send it with news. So they pounded it down, accumulated, and then sent it with news sent it. Crazy. That's what you call market manipulation, man. Whenever people bitch about oh, the market's manipulated. Well, yeah, it is. And if you read it, that creates really, really, really nice trades. Oh, yeah, I was long SQ as well. This was just a base hit intraday trade. See, that's why guys, this is why I'll never do alerts, is because one, I don't feel like it. I just don't. And it's not like I could talk about my analysis live, but you have to focus on your own intentions. Right? You have to understand what you think about the chart. You have to evaluate the chart and say, is this an intraday trade? Is this a swing trade market? Is this a multi-day continuation type of thing? Am I getting the signal? Am I holding for any reason? And you have to identify that and do that, right? Is this the level that I put all my risk off of? Do I incrementally add this? Are the contracts too spready to add all at once? Should I look for some bid fills and gaps beneath me? Should I look for a really nice level, or should I incrementally that is all you. I can't help you with that, right? So whenever you're looking at crowd, I've been talking about crowd being alongside focus ever since back here, and my eyes have been glued to this. If you're not able to catch this, and then you start getting scared up here on this trading day, and then you didn't catch the wick on it, or you didn't catch the day before, or you didn't catch the pullback on this trading day, I can't help you out with that. I just can't. And alerts aren't going to help you. You have to understand the context of the trade and the chart. You have to understand what is my risk to reward and what am I actually realistically going to target? What risk to reward do I want? You have to also understand that 6, 7 hour trades aren't always going to be high probability. I still own this one along with D-Dog, and they look good. So I'm holding. It's as simple as that. And I've already realized some profit on these. SQ. What day was I in SQ? I can't really remember. I think it was. Was it last week? I think it was this day. It was Monday. Are you talking about my trade recap or just the chart? Oh, you're asking about it for next week. Okay, yeah, I'll go to the scan now. I'm gonna end this call. I'm gonna end this not the call. I'm gonna end the recording here, guys. This is a 50-minute recording, yapping about charts, risk, execution. If you didn't learn anything, I don't know how, because I feel like I just talked about a lot of things that people can learn off of. Now I'm gonna make another video on the scan.